This is the start of a new trading series I'm doing on this channel. I'm pretty excited for this one, actually. So the name of this trading series is Romeo Makes Trading Predictions. I'm going to try to do this every Sunday, try to keep up with it. And so I'm going to do two things. I'm going to look at predictions that are recent, that are actively playing out right now in markets, that Romeo has made on his Telegram, his Twitter, so Instagram, social media. And so these predictions, he doesn't always make lots and lots of predictions every day. It's more like one or two really, really quality ones a quarter. Though who knows what frequency he might choose to drop these on us. It really is kind of a manna from heaven situation to see the we get charts from the source, high quality, predictions from the source, high quality. So he's usually just and sometimes the predictions can be pretty cryptic, and I'll actually this is a good example of one where he actually had a more veiled way of dropping the putting people on notice for this one in particular with crude oil. And but then he blatantly said it on earlier or late last week. So let's get into let's look at this. So he's basically saying in this tweet here on July 13th, how surprised would you be to see oil at all-time highs? What does that mean for the world? So I look at this as obviously an invitation for dialogue on X, but at the same time, this is a prediction. It's somebody like Romeo, whose whole purpose of his channel is centered around the charts. He's basically calling crude at all-time highs, or calling crude to go back to all-time highs. So I've got it outlined on my trading view, so we're going to switch to that really quick. These videos actually aren't going to take as long because they're simply just updates to stuff that's already playing out. So here we have the weekly chart of crude oil. I had mentioned in a previous video that in January I was actually looking to be long crude, and that my trigger was the U.S. Little military action in Venezuela, and the whole decapitation plan that they executed. And this candle right here, I was actually pretty proud to have called that then, though I didn't really do it publicly. I just did it with my trading. And obviously, this led into the Iran, the start of the Iran conflict, the current one that we have right now. And we had this big gap that formed on that weekend that they started the conflict. And that's March, the first week of March. And it's been 17 weeks of after that initial shock, as with Iran closing the strait and lots of macro and lots of geopolitical influence on this price. And then it cooled off with negotiations and perhaps hopeful workarounds and perhaps different economic implications. But this is the start of the war here. Was what I would call an origination candle, and it's taken us, so in other words, this is going to be the slow motion CRT, or the pause model CRT, that basically instigates a bullish entry that can rip to the all-time highs. And so as far as the whole candle counting, you can see it best on the actual crude futures contract in on FX Replay. And I'm going to switch to that. We shall be so excited that Romeo is dropping these predictions and kind of guiding us, and it's a great opportunity to help to check our own higher time frame bias. And so it's like he's, I'm going to talk about this crude one. I'm going to make another video shortly after this talking about the Ethereum one. But it's awesome to have guided markets. I can trade crude futures. I can trade Ethereum contract futures. So I'm incredibly fortunate to have guidance on a macro scale, or be given macro targets. So anyways, I always look for between 7 and 12 candles in the with the origination candle being candle number 1, and before the peak of manipulation that gets me into my entry. So in other words, it's like my setup before the setup is counting these candles: 1, 2, 3, 4, 5, 6, 7, 8, 9. So there are 9 candles. Now the reason why I had to switch to FX replay is because my setup, I changed the time frame based on the range. So this is a 2-week candles. We're looking at 2-week candles right now. And in crude, in the crude contract for oil, which is West Texas Intermediate, we never cleared that. We never cleared this origination candle, though in the Brent contract, which is North Shore oil, we did clear it at the end of March there, when things were, when the sky was falling essentially in terms of oil supply constraints. So we did get an SMT in those 2 correlated assets. I guess what we could do is we could think about entries, and we could also look at continuation plays. 2-week, so it's the with time frame alignment, we'll have 4-hour is a 1 week, 4-hour signal helps you out with a 1 week. 8-hour signal is for 2 weeks. So I'm going to the 8-hour chart now, and we have an 8-hour model number 1 that occurred July 6th. We have a breaker entry that occurred July 10th on that Friday there, into the Sunday open. And so if you might be wondering, why did crude just rip off the Sunday open? Obviously there's macroeconomic implications as well, but that is because you had your breaker entry. We've already traded into our breaker entry that was on Friday. Though I gotta say that if you use the breaker itself, obviously the real 8-hour breaker is back here. I'll draw it for you guys. I'm going fast. So I would just use that entire candle, high to low, as a breaker. But Friday's 8-hour candle there becomes a breaker entry, and then as a futures trader, I always try to think about this: is if I had to scalp long last Monday, Monday the 13th, which is when Romeo tweeted this, then I would be playing the breaker at that moment there in the London session. It looks like, actually, let's zoom in on that candle too. We're going to the 2-hour chart. Yeah, so it was in the London session, the 4 a.m. London to kind of early NYAM there. But yeah, no, I mean it's these trades that you'd be holding into the afternoon. And then obviously we have a cool down here midweek last week, the middle of the week, with a late week rally again. So this gives you a pause CRT to get into there if you wanted to play it like that. Probably using this candle here as an origination candle, or it's kind of does a sniper entry between this low and this. So it does, yeah. Anyways, not as important. So let's go back to the 2-week chart and just remind ourselves of targets here. So when can we expect for oil, black gold, to hit all-time highs? If it took 9 candles to hit the manipulation, then it will take 3 candles, or perhaps even 2, to hit the target. So what we're looking at is it's a 6-week period of distribution with the 2-week with the 2-week tempo, right? So in other words, if the first week in a 2-week pair is a little bit wishy-washy, it's more of a doji, right? It was bullish, right? And almost a bullish engulfing, right? But it didn't quite have the impulse. Like it stabbed up and then it retreated. Well, then this next week was a large impulse candle. And that's what we might do with oil as we march higher to the all-time highs here at 120 on the crude front month. Is we could do it in a rhythm, a weekly rhythm of a more of a here. A more hesitant up close candle, or even a down close, but more of a doji, right, where it's just expanding, like it wants to expand into internal liquidity, right? But I see this as being an FEG, so I don't think, like, in terms of trading next week, and we're on the weekly chart right now, I don't see the low of next week's candle as it's printing close this to prevent this candle from becoming an FEG. I see the low, maybe it's a symmetrical wick. So wherever this candle opens, we don't know where it's going to open yet. Till 6 p.m. on Sunday today. If you take a measured move of this wick here, and then we might have a small gap. We could open in this gap, right? And we open in this gap, and then we make our measured move lower. So we open. We make our measured move lower there. So crude front month futures at 78.28 would be an excellent weekly low to print for next week, and we could stab higher, but we're not gonna make. We could have a close here, maybe to fool some bulls, right? Some people who want to be long crude but maybe lack conviction, and maybe to entice some really, really aggressive bears, right? But then the following week is going to be a crazy rip higher, right? Just with this 2 weeks. This is what this 2 week cadence is suggesting to me, and then we'll do it again. And so for 4 more weeks, starting tomorrow, Monday, July 20th, to have a model play out like this and to go parabolic, into those into that high there. Is essentially my base case after being given the nod publicly on Twitter by the source. Yeah, so that's my rough outline for crude. I don't really know if there's anything more that I really want to say. But yeah, that's it. And that's your macro bias. That's my micro bias. Alrighty, thank you so much. I'm excited about this video series. I'm going to make my